So we talked about real estate. We talked about some of the other side hustle in Turo on how we were able to make it. If you added up all of the numbers, I'm talking about, let's just call it an even $750 a month I was getting from Turo, plus the $1,700 from the first real estate, plus the $450 I was getting from the other one. I mean, we're talking about, you know, close to $3,000 additional income I was collecting per month. Obviously, all of that is being reinvested so that I can increase the principal payments. I can increase the equity on all of the capital that I own. And that was really the purpose, right? So 2020 hits, what happens, right? COVID-19, that's right. So when COVID-19 hit, it was one of those situations where it was like, man, I've already been thinking about this. I've already read through Dave Ramsey's books. I've been starting to drink the Kool-Aid. Really, the purpose of me doing this, why I'm reinvesting, is because I wanted to become debt free, right? And so I wanted to continue down that road, become debt free. So I set it out for myself that I don't want to have a mortgage anymore. I don't want to have these investment properties with a bill that's coming. Even though I'm making positive cash flow, I wanted the peace of mind knowing that I didn't even have an investment loan out there for somebody to have an I got you moment on that says, oh, now you're not making cash flow. I don't care. I want my money. COVID-19, I decided that I wanted to put the houses up for sale. And so when I did that, remember the real estate. So I put all of the real estate aside from the primary home up for sale. As soon as I put the ones in Gulfport up, we got offers galore. Knowing that, you know, the rental prices increased, the rent increased, I knew I was going to be able to demand a little bit more than I made or that I was charged for the home. So I knew I was going to be able to list it for more than $250K. In this case, I was making over $3,700 a month before any taxes or any other fees that I had to pay. You know, multiply that by 12, you end up with about $42,000 to $45,000. I looked at that as 12 to 15% of the value of the home. So I settled at about $310. There were people galore. I had like 5 offers in the first 2 days, which was great, right? So we ended up selling it for about $310. So if you look at that, that was a $60,000 profit over the course of those years. $1,000 is 20%. So I already had 20% equity from the very beginning. And over the course of that 2.5, 3 year period, I was increasing the principal that I was putting down every month. So I ended up having a balance left of about 170, right? So from 170 to 310, all of the other profit minus the agent fee was all mine. So it ended up being a staggering number for me, more money than I ever had in my bank account in my life. But it was over $100,000. And I'm like, wow, it made me very happy. But then the next step was trying to figure out what to do with that money. So now I have that. Did I have quite enough to pay off my mortgage? No, I didn't, because I still owed over $100,000 on this home. So there was still something else I needed to do to bring it up to that right amount. And so this brings me to the third side hustle, which is the stock market, right? So this is probably the most risky thing you could do being in the stock market. So it's best if you do as much research as you can before you start blowing money in there, because if you have a faint heart, then you're going to stress yourself out. You're going to make decisions in haste. And you're going to regret half the decisions. You're going to be second guessing yourself, and then you're going to be looking at every other stock. Even if you did make a good decision, you're going to be like, wow, I could have did this and made even more money. Stupid me. You don't want to ever think like that, because all that's going to do is allow you to make more mistakes. So it's not for the faint of heart. I suggest you read a few books, look at a few podcasts, and get some advice from financial experts that know the market well enough to not be dissuaded by market swings, especially the way things are going today in today's market because of COVID-19 and other side factors that are happening. Of course, we have an election year, so that's probably going to have another effect. With that said, that's exactly what I did. I looked at a few books. I've been looking at books for years in terms of investing, whether it was personal investing, or investing for retirement, professional investing. One good investing book that I saw in terms of trying to get into the stock market, which actually motivated me, was Phil Town's Rule Number 1 Investing. It's a little controversial. Some people think that, Phil Town is a type of person, he's just saying some general hoopla, which, I don't know, maybe some of that's true, but I wasn't the type that was knee deep into investing. It wasn't my main hustle. So it was something that I needed to get some information on, and I thought Phil Town explained some things very well. Essentially, his rule number 1 investing is that, as an individual, you can beat the index, right? So when you think about all of these capital firms who take globs of money, these hedge funds that have globs of money from, firefighters unions or teachers associations and stuff like that, they have all of these bundled up funds, and they have to figure out where to place these investments. And when they do that, it's going to be harder to buy in or pull out of the market in such a small period of time. Returns as a result. You and I don't have that problem because we don't have millions upon millions upon millions of dollars to invest at the same exact time. We're talking about thousands, right? And so you can execute those financial transactions with the stock market within minutes, maybe seconds in some instances, right? You'll be able to see what these hedge fund investors are doing and just follow their actions, right? If you see them moving, all right, I can pull out. I don't have to worry about it. I'm at the very front end of this. Let them deal with all the tail end, because it's going to take a while to pull all their funds out for that particular stock. If you have a volume of 100 million shares being traded on a single day for that stock, then, having 5,000 is a drop in the bucket. But if you have millions of those shares, you can't pull it all out at once because you don't have enough people trying to buy what you're selling, right? So that's kind of the premise of it. And it basically saying, hey, I can invest, and I can have this little simple strategy, which, he endorses Warren Buffett, with the strategy that he's always had. And you can effectively take 15% per year in the stock market. So I wanted to try to do that. So I was starting to do the research, looking at, particular stocks that I felt comfortable investing in. And so I did that. This was during the time when COVID-19 hit. So there were things that, you saw as opportunities, quote unquote, but without the proper knowledge, you can get burned. So they call it these beachfront or these beach stocks, right? If you never heard of the term, it's the bookings, the entertainment. The A stands for airlines. The C is for cruises, and the H is for hotels. Those are the beach stocks, right? Everything in that industry. So obviously when COVID-19 hit, all of those beach stocks took a tremendous hit, and they got, I won't say blown to bits, but if you look at the Disney stocks, Disney cruise stocks at that point in time, they took a hit. Norwegian, Carnival Cruises, they took all of the hit, the brunt of the COVID-19 effect, because nobody was traveling. Took hits, right? Then they started to bounce back slowly, right? There was a period of time when it seemed like it was going to be on a good way up. And, you hear about catching a wave or missing a wave and stuff like that. Some things can burn you. And so I had a firsthand experience in that. I was like, whoa, I see Norwegian. They're starting to climb up. I need to catch this wave before it's too late. Well, I basically caught it at the very top of the wave before it dove right back down. I didn't invest all of my money, but it was a decent amount that I invested it in. And when that happened, well, I took a nice hit. So that's why you have to think methodically, and you have to make sure you're sticking to, whatever plan that you have when it comes to stocks. What's your goal? Make sure you have a goal. Make sure you're picking the right stocks. You have to do research on those companies. What are they engaging in? Is there any fraud going on? How has their average been over the course of the last year? What's their return on invested capital? All of these little things and more, it's important to look up. And Philtown has that, but it was just one of those things. You might catch a wave and you want to be a part of it. Don't let your emotions get the best of you. You better make sure you know what you're doing. Of that So I put 100K into the stock market. I invested probably about 25K into the Norwegian stock, and I lost probably about a third of that when that wave went right back down before I finally pulled out and said, you know what, forget this. I'm not doing that. So, you know, that was a big hit for me. It forced me to take a step back and look at it like, all right, what am I going to do? Because now it took me further away from my goal of being debt free. So I'm going to stop right there, because what I really wanted to show you was, you know, the multiple income streams. And I think I did that with having the Turo, having the real estate investments. Those were solid investments. So that's a risk. But the biggest risk by far was the one with the stock market. So now, you know, like I said, I'm going to stop there. I hope you enjoyed that video. The next segment is the final part in the series, which is sticking to the plan. So I hope you stick with me the rest of the way. Again, if you have any comments, please leave them below. Click like, subscribe. Let me know what you think. If there's any additional information that you want to hear based on this segment, please hit me up directly and we can chop it up and go from there. Thanks for watching, and I'll see you in the next part.